How do you think financial services is being listened to at the moment by government? As government sets about trying to craft its strategy, is the financial services industry getting a good enough hearing, and has that improved since the election?
Well, the UK financial services is one of the largest in the world. In fact, if you take the net exports of the UK, it's bigger than the next four put together. And so it's really very important, not just to the UK, but to the world. You know, it's just over 10% of GDP. And then if you add the collateral services around it, it probably gets up to, you know, half again. It's got 1 million employees. It's got 2.2 million if you include accounting and so forth around it. Of course, the government has listened. In fact, the reason we know that is that the Treasury's replayed that back to us, as has the Department for Exiting the EU. And in fact, in the Chancellor's speech at the Mansion House, he reiterated all of that. So we do know that it's on their agenda.
And do you think they're more receptive since the election, more receptive to a softer Brexit, for want of a better?
Well, we think so. I mean, we don't actually know at the moment, you know, what the stance is, because there's a lot of political uncertainty. We don't think it would have gotten harder, but it might open up some options that we never thought of before. But again, we just have to wait and see.
What kind of level of access is the financial services industry looking for? There have been reports this week about looking for free trade agreements starting at the time, for the financial services industry specifically, at the time that we leave the EU. Is that something that the industry is looking to achieve?
Yes. The thing you have to remember is that London is the EU's financial centre. It's actually been built not over decades, but over centuries. And therefore, it's not easily replicated in one place, or even in a number of separate places. And if it was to be replicated in any tangible way, it would take an awful long time. You need an awful lot of buildings to replicate that. I mean, so for example, if the worst came to the worst and we weren't allowed to do EU or Euro-related activities in London, you'd have to move a bank the size of Barclays out. And so it's pretty material. And so we don't think that's likely, and therefore the right thing for the EU and for the UK is to retain a significant proportion of that in the UK. And therefore we're looking for a free trade agreement, some mutual access to each other's markets. We're also looking for regulatory cooperation to ensure that. And at the same time, if things have to move, we can't move things that size in 2 years, and therefore we've been looking for a period post that where we avoid a cliff edge effect.
So do you think a free trade agreement by March 2019 is doable, that kind of time frame?
Well, ideally, or if not, if there is some form of transitional arrangement post that, it gives time to solve that problem.
What role will equivalence play? Many people have suggested it could replace passporting as a way into Europe. Others suggest you shouldn't rely on it because it can be withdrawn at short notice. What role can equivalence play? I mean,
my own personal opinion is that face-to-face activity will largely move into the EU in a domestic sense, and you know, but the cross-border activities may not. I mean, remember the G20 has a policy of open capital flows, and so why would that change too much? So we're pretty confident that quite a degree of wholesale activity, even clearing activity, etc., fund management will remain in the UK and London in particular. So I think that a pause is necessary here. Now, whether that happens quickly is another matter, but we think that's the right end point, and we think it's in the interest of the EU as well as the UK.
Because Andrew Bailey at the FCA has talked about international equivalence, Mark Carney has talked about super equivalence, a suggestion that perhaps an international scheme overtakes the need for European equivalence. Is that something you would like to see?
Well, in general, at least the larger players at the moment are operating consistently with global standards. And we don't think that's going to change. But then if you move beyond that, what we're suggesting is some form of mutual recognition or cooperation of each other's regulation. I mean, for example, it's not unreasonable if EU activities and Euro activities are conducted in the UK that there should be some form of oversight by the EU. Why would that not be reasonable?
So have some of the red lines that the government has put in place, are they causing problems then? If that were to be one of the red lines they wouldn't want to step over?
Well, we don't know what the red lines are at the moment, but the European Court of Justice is obviously a very difficult line, and of course the free movement of people is the other one. I mean, for Britain to grow, we need skilled immigration. And so therefore you can't actually have a very tight migration number for the UK, particularly take fintech, for example. You know, we're not going to staff up. That if we want the UK to be a global fintech centre and one of the leading ones, we're going to have to import the talent.
Is there any progress on skilled migrant visas that you're aware of? Is this something you're still pushing for, that you want the government to give more attention to then?
Well, I think the first thing we're pushing for is to retain the people we've got and give them some certainty.
Have the government not gone far enough?
Well, I think they've already said that the EU is wanting more clarity on this, but the government's already said that, look, if you're here 5 years, then you will be allowed to settle here. And remember, that's an EU law anyway, so I think that will happen. So if you've been here 3 years, if you take the 2 years before we exit, then and stay in that period, then you'll be allowed to stay. And I think that's about 85% of the people. So I do think that's the most important thing. And then the second thing is to have continued access to talent.
Can I ask about clearing? We've talked about this a lot here in the UK. The LSE, the Bank of England, the Chancellor are all making the case for why a fragmentation of clearing would be a bad idea and drive up costs to businesses. Is it that kind of logic that you think will make the decision, wherever it's made, Brussels, Frankfurt, or will other political factors come into this?
Yes, I think the issue is a conflict between the politics and the economics here. To my knowledge, nobody has asked for clearing to move from a business standpoint, because it's actually working very efficiently the way it is. You know, the transaction costs on an interest rate swap is 1/4 of a basis point, simply because the scale is so enormous. Now, if you and so it is true, if you say, well, the euro aspect of that has to move into the EU, you lose the benefit of the multi-currency netting effect. And therefore the capital requirements will go up and it'll be less efficient and more costly. If you then say, well, okay, let's open up a multi-currency system in the EU, but you keep the multi-currency system in the UK, which is much bigger, then that will be more efficient, but less efficient than it is today. And the one that you're moving is actually going to be very difficult to be economic. So personally, I don't think it will work, aside from anything else. And so this is really political rather than economic.
Does that explain what the ECB is saying as well, that they seem nervous to have such a large amount of euro clearing, a big percentage of the euro clearing business taking place right on their doorsteps, out of their oversight?
And you can understand that. As to why that'd be a concern. But if they have oversight over it, then that should be able to accommodate it.
Do you think there is a role for some sort of ECB oversight?
I do think so, for EU activity and for Euro activity. And there must be a way of accommodating that.
A lot's been made of the opportunities that the UK could have after Brexit to go out and do big trade deals. Where is a priority for you for a trade deal? When you look at financial services and how much it's maybe been underrepresented in trade deals in the past, where is a priority? Is it the big markets, China, India and the like?
Yes, I think the issue is that there are very few services trade deals. There are loads and loads of goods deals. If you look at Switzerland, for example, it's got a number of trade deals with the EU, but none of them are in services. And so we would look to substituting if there was a harder Brexit, other markets. But you get some practical issues there. For example, we've got a lot of US inward investment already, and we've got a lot of UK outward investment into the US. In fact, if you stand back from it, we can do most things in both places already that we might want to do. Now, we would make that a priority.
The US deal?
Yeah, the US. And of course, we would make the faster growing economies like India and China a priority. And they're already pretty active on the Financial Services Trade and Investment Board, which I'm a member of. And we've actually got working parties on that already, not to do trade deals, but to actually understand it and expand the relationship.
Are there hidden dangers in a financial services trade deal with the United States?
I can't see what it would be.
Just they're pretty competitive in financial services already. It wouldn't pose a threat to the UK financial services.
No, because the big American players are here already.
So what vision do you have then for the UK financial services post-Brexit? What does it look like?
You know, when you think about the TheCityUK, which coordinates all of the financial and related professional services sectors, you know, the number one issue on our minds is Brexit. But you have to remember that we still got business as usual, a big part of which is actually expanding our interest in the regions here. But, you know, it's not too far away, 2 years. And so one of the things that I did is I initiated a piece of work, which was a vision for UK financial and professional services post-Brexit. And of course, it's been announced today. And we can see why the UK should be a leading global financial services sector, producing a higher gross value added than it is today, and probably a lot more coming from the regions than from London than is true today. And it actually consolidates the UK's position because it already is the largest exporter of financial services in the world.